the wall silver will hit next week. There are a lot of moving pieces putting pressure on silver, pushing it down to prices that we do not want to return to. Let's start on FX Empire. This article really outlines those moving pieces that are coming full force at silver. And the headline reads, Silver forecast divergence from gold rally signals caution as prices drop below $31. Now, presently, as I record this video, we're already at in the $29 range for silver. This says, silver struggles as gold reaches new heights. Silver prices are edging lower, creating a notable divergence with gold's near record performance. This split in precious metals has raised questions among traders about the factors driving these contrasting trends. And this author really outlines the moving pieces right here. This says, first, concerns about industrial demand in a potential recession. And to understand this, let's bounce over to Reuters because they explain this well. Reuters says, a U.S. manufacturing output beats expectations with 0.4% rise in June. And this is what we look at when we try to determine if the economy is expanding or contracting. And Reuters starts by saying, production at U.S. factories increased more than expected in June. Increased more than expected, contributing to a solid rebound in output in the second quarter, though higher borrowing costs remain a constant for the manufacturing industry. Factory output rose 0.4% last month, following an upward revised 1% increase in May. The Federal Reserve said on Wednesday economists polled by Reuters had forecast factory output would advance 0.2% after a previously reported 0.9% jump in May. Production at factories shot up 1.1% when you look at it year on year. Now, this is the dichotomy that we have as silver stackers, because when the economy shows strength, when, as this article is highlighting, when we see factories, the manufacturing industry expand rather than contract, when the economy in that way is growing, people feel more confident. And when the public is more confident, they will pull from the safe haven of precious metals. They'll take their investments. They'll make more risks. They'll go back into Wall Street. They'll make more risks in general with their money. And when that happens, we get a pressure down on silver price. So yes, we do want the economy to expand. Of course, we want a growing, healthy economy. But at the same time, this is difficult for us as silver stackers. Let's come back here. This says uncertainty around the timing of interest rate cuts. And this week, we're all feeling very positive. Oh, by the way, if you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there. Hit that like button. It really helps. This week, we've been all feeling very confident. Look at this. This is the Fed Watch tool, and we're looking at 90. Let me see if I can get that bigger. There you go. 95.3% confidence in getting a rate cut for September. So that's having everybody's ready for their ticker tape parade, right? We're all excited for this to happen. So although uncertainty has put downward pressure this week and coming next week, it looks like we're going to be able to push back on that feeling. This is next one, possible overvaluation following its strong rally earlier this year. And this is the 3 months ago when we had that big boost in the price of gold. Silver, of course, followed. And now traders may be feeling that it was an overvaluation, and that can impact what we see for our spot price. Because if traders start to pull back, whether it's on a short or on a long, if they're pulling back, then the spot price of silver is going to be impacted. And here, before I get to that fourth one, I think this is really key for us as silver stackers, because this says softening physical demand in response to high prices. And I know that every time I visit my local coin shop, I go a couple of times a week, if not daily, to my local coin shop, and I hear the same thing. And the narrative is that people who have deep pockets are still buying silver often. And those of us who are just regular working stiffs like you and I, we're kind of sitting on the sidelines, and we're not buying as much small amounts of silver as we typically did back when silver I'm happy to say back when, right? Because we had silver hovering at $22 to $24 for so long. That was a 2-year stretch. So when we were at that stagnant price, we were buying more silver. We could afford it. That $10 price tag, it really makes a big difference when you add in the premiums. So you and I, are really sitting out more and being observers, while those with deep pockets are still going in and buying silver, buying gold. I know for myself, I am definitely feeling that way. Now, here he talks about ETF flows and the market sentiment, and this putting downward pressure on silver. It says, while silver struggles, gold ETFs have seen renewed interest. The World Gold Council reported inflows of 0.5 billion or 7.6 metric tons into gold ETFs last week. This trend highlights the current performance for gold among institutional investors. And of course, people are feeling confident about gold. They're going to keep going in. The good news for silver is that typically when gold has that much of attention, we'll see a lag. This is the history of silver. This is the pattern of silver. We will see a lag, and then silver will follow. So hopefully that will get us out of this stagnant situation we're starting to see for the silver price. This says, gold's contrasting rally. In contrast to silver, gold prices have reached a new record high at $2,482. Whew. Oh my God. Just as an aside, I asked my friend yesterday, we were just kind of teasing each other, and we were imagining that if we came into a bit of money, not an enormous amount, let's say $5,000. If we had $5,000 to spend, what would we do with it? And honestly, with all my experience of stacking silver, all of my years, and those of you who've been stacking silver for decades, you've been in this for years, you're like me, you've seen a lot. I wonder what your answer would be. For me, what I told him was I would not go into gold at this high price. I wouldn't. I would hold back. And really, maybe I'm being stubborn, because my buy price for gold is quite low. I mean, at least it would have to drop to 2,000. That's my buy price for gold. I'm so bullish on silver, even though this video is telling me, the point of this video is saying that the price of silver is going to continue to push down. I'm still bullish on silver because I see the history of silver, and I see the patterns, and I still am. I would still go all in on silver if $5,000 landed in my lap. No, I would not. Look, even with premiums tacked onto it, I wouldn't even be able to buy maybe, if I got a good deal, maybe I could get 2 full ounces of gold for $5,000. That's where we're at. So let's go a little more of this. It says market forecast. The outlook for silver remains mixed in the short term. The metal may experience a soft third quarter due to ongoing uncertainty about U.S. monetary policy. However, there's potential for a rally to gather place later in the year. And I really think that rally, again, is going to come around this confidence in the Fed rate cut. When those rates start coming down, every consumer, I'm not talking about silver stackers, regular people, everyone their confidence is going to boost, and they're going to be out there. They're going to be taking more risks. That is absolutely what is coming down the pike. Please hit subscribe. Please hit like. It really helps to get this information out there.